Good morning, good afternoon, good evening. Okay, we'll begin with income from house property. Before we go ahead with income from house property, please ignore the page number in the material because the material that is given to you might have a different page number. So please do not count these page numbers. Okay, so yeah, income from house property. For the 5 heads of income, already we discussed which one will come in which head. But now let us go in detail about the same. Okay, to call it as a salary income, what is the most important relationship that is required? Employer-employee relationship, master and servant relationship. Okay, the same way for house property, what is the relationship that is expected and required? Owner and tenant. Relationship of owner and tenant is required. Okay, owner of the property, and there should be a tenancy or tenant. Okay, the tenant, whatever is paying to the owner for the house, we call it as which one? Rental income. Rental income. And please remember, if there is a house property, if you let out and get a rent, yes, that will be taxable under income from other, house property. If you let out the land alone, then that will be an income from other source because there should be a construction. And there will be some cases, for example, let us assume I rented 2-story building, ground floor, first floor, like that. Ground floor, I am using it for my own residence. First floor, I am not able to use it, I don't require it. So what do I do is I get the permission from my owner, landlord, and give it for letting it to another person, or I am letting it to another person. Okay, this is called as subletting. What is subletting? Tenant giving out a portion of the property to another person. We call it as what? Subletting. For me, okay, the income or rent received from my subtenant or from my tenant is called as income from other source because I am not the owner of the property. Simple. If tenant is going to let out a part of the property and get rental income for the same, that will be called as what? Income from other source, because there is no owner and tenant relationship, or I am not the owner of the property. Okay. What is the basis of charge? What is the basis of charge? Land and building opportunity thereto. Sir, what is the meaning of this? Simple. I have got 2000 square feet land. In that 1000 square feet house is there. Okay. I let out both. Okay. Building and land along with that. Okay. If I get a rent for the entire 2000 square feet land, in that there is a building. Okay. So if I get a rent for that, that will be called as what? House property income. Okay. Okay. Let us assume I am having 2 tenants. One will use the house alone, okay, and pay me a rent. Another person, I told you, in the 2000 square feet area, 1000 square feet area is the building area. Remaining 1000 square feet is a vacant land, For that vacant land, I let out to tenant number 2. Building is tenant number 1, paying rent, there is house property income. That land, vacant land, is let out to another tenant, separate tenant. That rent will become income from other source, the income from other source. But if I let out both the building as well as the land surrounding the building to the same person, the income will be called as what? House property income only. Okay, so building along with the land, if I let out, then that is called as what? House property income. Okay, sir, what is a house property? What is a house property? Simple definition. It is not defined by Income Tax Act. Anything covered by a roof. It can be mud house, hut, or it can be a concrete roofing, okay, or it can be any type of roofing, anything that is covered with a roof. It is not only covering the house properties that is used for residence, this also covers godown, shops, offices, etc. Okay, so even, for example, you are having a commercial complex, there is a space like 2000, 3000 square feet, that is rented out. Or for example, this Bharadwaj Institute building is a rented building. Okay, to the owner, it will be called as house property income. That the rent we pay will be called as which one? House property income. So house property income does not include rental income from, okay, that is the house is used for residence. It also includes all types of commercial properties like godown, shops, offices, etc. Okay. Go through case number C. For example, you are a real estate promoter. You constructed about 1,000 flats. In that, let's assume 800 flats are sold. Remaining 200 flats, what you have done is, till the sale take place, let out. The construction company is letting out, because the 200 houses are yet to be sold. Till they are sold, okay, the houses are let out. This is called as, okay, house held as stock in trade. For a builder, unsold flats are called as what? Houses held as stock in trade. Okay. If this is let out by the construction company, that will also be called as house property income. Simple, sir. You are a construction company. Unsold flats are let out by you. The rental income also will be called as what? House property income. However, sometimes, you can see advertisements. If you buy a flat from us, minimum guaranteed rent is 10,000 per month. We will get you a tenant for 10,000 per month. To show this, what you will do is, okay, you constructed about 300, 400 flats. In that 3 or 4 flats, you will keep tenants. To show, yes, these are the tenants who are paying me 10,000 per month or 20,000 per month, like that. You have kept some properties for rent. Okay, this is not a house property income. This is called as, okay, this particular thing is called as letting out to improve the business performance. In such case, it will be taken as business income. Sir, we are not clear. Simple. Unsold flats are let out. You get a rent. That is which income? House property income. Okay. To improve efficiency in business, some flats you are letting out and showing to the purchasers of the flat. Yeah, see, these are the tenants paying 10,000 per month rent or 25,000 per month rent. You want to improve the business. For that, if you let out the house, that income will be taxable under what? Business or profession. Then, point number D. We had seen in salary chapter, we have learnt one particular thing. Rent-free accommodation. House owned by employer given to the employee. Okay, free of cost. That is called as what? Rent-free accommodation. We have also seen concessional rental accommodation. What is concessional rental accommodation? House is owned by the employer, given to the employee, some rent is recovered. Okay, under which head that income will be taxed? Employer recovers rent from employee for the house or the staff quarters provided. It will not be taken as house property income. It will be taxable under PGBB, business or profession, because that house is given to the employee, okay, not as owner and tenant. Okay, in the staff quarters you are staying not as a tenant. The primary relationship was employer and employee. That's why you are given that house. So if rent is recovered from employees, that will be taxable under PGBB, number one. Number two, those houses are kept for improving the business performance. Okay, employees can stay very near. Okay, employees are provided the accommodation that will make them to come for the work fast and will have a better efficiency. It's also a kind of a perquisite or part of salary that is given to the workers. So, rent of staff quarters collected by the company or any other person, that will be taxable under what? PGBB chapter. Okay, so these are the 4 cases. Okay, once again let me repeat. If I let out land and building together, that will be called as what? House property income. If I separate building and let out, that is house property income. Land, if I separately let out, that will be called as what? Income from other source. House means anything covered with a roof. This includes residential houses, godown, shops, offices, etc. Then unsold houses, okay, stock in trade, unsold flats, etc. If that is let out, that will be called as what? House property income. However, if that particular rent is collected or that particular flats are let out to show the business performance, improve the business performance or efficiency, that will be called under what? That will be taxed under what? PGBB. Rent of staff quarters will be coming under which one? PGBB chapter, because the main relationship is employer and employee over there. Okay, we'll proceed. What is the, okay, we had seen definition of house property. Okay, second one, there should be owner and tenant relationship. Owner and tenant relationship. Okay, in certain cases, ownership, it's very difficult to identify. In certain cases, we'll see what are those cases. Okay, ownership is determined based on the title deed. Ownership is determined based on the title deed. You can find the registration documents. In that, whoever is named, that person will be taken as owner. Okay, for example, there is a property in my name, I will be called as a owner. In certain cases, the name as per the document will be different, but income tax law will say you are not the real owner is somebody else. Okay, we call it as deemed ownership. Deemed ownership means you are supposed to be the owner, okay, but the property was registered and held under different name. Okay, simple. Look at the first example so that you will understand better. Let's assume wife is having a taxable salary income of 25 lakhs. Wife is having income. Husband is unemployed. He is not having any income. Okay. Now what happens is, wife has accumulated the savings, purchased the flat and registered on husband's name. Okay. Purchased the flat, registered on husband's name, or she purchased the flat on her name and transferred to husband. Okay. Now, as per the title deed, who is the owner? Husband is the owner. But who is the real investor? Wife is the real investor. Now, income tax law says wife is supposed to be the owner. Wife is supposed to be the owner. To avoid income tax, you transferred this to your husband name or you gifted to the husband name or whatever. So, simple. Now, income, rental income derived by whom? Husband. But law says this rental income will be taxed in the hands of the wife. Rental income will be taxed in the hands of the wife. Simple. Spouse means for husband, wife. For wife, husband. Okay. Simple. If wife has purchased property in her name, okay, later on it is transferred to husband, then if husband is deriving the rental income, that income will be taxed in the hands of the wife because she is the real owner, supposed to be real investor. But if husband pays money and purchases property from wife, or wife pays money and purchases the property from husband for a proper consideration, then this particular concept is not applicable. Read it, you will understand. When an individual transfers property to spouse without adequate consideration, the transferor will be taken as what? Deemed owner of the property. I will give you another case. For example, I purchased a property, okay, and transferred to my wife without consideration. Wife is getting the rental income. As per the title deed also, wife is the owner. But as per income tax law, who is supposed to be the owner? Who is the real investor? The husband. Okay, income will be taxed in the hands of the husband. However, if the transfer is made with an agreement to live separately, then the provision will not be applicable. Let's assume in the same case, husband transferred the property to wife without consideration. Okay, let's assume this transfer was made for a divorce. Then, in the process of separation, if the transfer is made, then wife will be taxed for the income derived from that property. It will not be included in the hands of the husband. It will not be included in the hands of the husband. Hope I am clear to you. Clear? Let me to make it simple. Purchase the property and transfer to spouse without consideration. That income will be taxable in the hands of the transferor, number one. Okay, if the transfer is made with consideration or to live separately like a divorce process, then this clubbing will not be applicable or this concept will not be applicable. Transfer to a minor child. For example, I purchased a property, registered or transferred or executed a will on my minor son or daughter's name. Okay, the income of that particular minor child, okay, rental income will be clubbed in the hands of the person who transferred the property. Do you understand? If you transfer to a minor child, rental income received by the minor will be taxed in the hands of the transferor. Okay. However, this is not applicable to minor married daughters. Can a minor marry? Can a minor marry? We think so. But Google, this is not my subject, but still you can Google, can a minor marry? What are the restrictions? They will say it is prohibited, but go through the law. Yes, minor marriages are prohibited in certain circumstances. I do not want to go into that because there is a debatable issue over there and that is not part of income tax also. Okay, this provision is not applicable to minor married daughters. Simple, father or mother purchased the property, registered on minor married daughter, then the income will be taxed in the hands of minor married daughter only. Okay, the transferor will not be taken as what? Deemed owner. Then, holder of impartiable estate. What do you mean by holder of impartiable estate? There is a common property or common properties. Let's assume a person has done a big business, okay, earned good money. Through that, he purchased, let us assume, different types of hotels, different types of commercial buildings, so many things, okay, he purchased. There is a huge rental income. There are about 20-30 properties. Let's assume there is a huge rental income, okay. Now, he had 4 sons. The person has 4 sons, let us assume. Okay, the person who purchased the property has son A, B, C, D, E, F, G, H, like that. 4 sons and 4 daughters, totally 8 people. Let's assume the person passed away. Father passed away or mother passed away. Now, between these people, amongst these 8 people, there is a dispute. Who will be the owner of which property? There are 20-30 properties. We are 8 people. Okay, we have to divide the property amongst ourselves. But there is a big fight. The case is pending in the court, etc., claiming the property. Because I want property X, my brother is also claiming property X, like that. The case is pending in the court. Okay, now, who will be liable to pay the tax on all the properties? Let's assume there are 30 commercial properties, okay, residential properties, etc. and all. Rental income comes to 5 crores per month. Rental income comes to 5 crores per month. The person who is the real owner of the property passed away. Okay, the property is not separated also because there is a fight between brothers and sisters on splitting the property. Who has to pay the tax? Income tax law says, who's taking care of those? Who's collecting the rent? Who's taking care of those building? Who's collecting the rent? Okay, that person will become the deemed owner of the property. For example, 4 brothers and 4 sisters, let us assume 1 or 2 people are the in charges. They are collecting the rent and splitting the income as of now. Those 2 people or that one person will be taken as what? Deemed owner of the property. Okay, or let's assume court appointed a person. Till the property issues are solved, okay, this person will collect the rent from all the 30 properties, okay, and give it equally amongst these 8 people, like that. A court has appointed a person. He is called as a holder of impartiable estate. Okay, impartiable means not separated, estate means property. Okay, so for the properties not separated amongst brothers and sisters or legal heirs, okay, the person who's in charge, who's holding the property, who's collecting the rent, who's maintaining the property, that person is liable to pay tax on such income. Okay, the term impartiable estate means the property which is not legally separated. The holder means the person who is in charge of collecting the rent and taking care of the property, okay, will be liable to pay the tax. Member of a cooperative society. See, if a property is allotted by a cooperative society, you will become the owner of the property on the payment of all the installments, EMIs, etc. Maybe about 20 years later. But let's assume I was allotted with the house by a cooperative society. I am paying EMI. Okay, I will become the owner after 20 years. Now what do I do is I don't stay in that house or flat. I let out the flat to somebody else. The rental income derived by the member to whom the house is allotted, though he is not the real owner now. Okay, this person will be called as what? Deemed owner of the property. Okay, that is about member of a cooperative society. Partial performance of a contract. Do you understand member of a cooperative society? Simple. If a member of a cooperative society is allotted the house, okay, whether he is a real owner or not, whether the ownership is transferred or not, doesn't matter. If he gets a rental income, that will be taken as what? That will be taken as house property income. Partial performance of a contract. Okay. For example, I am running a construction company. We two signed an agreement. I will construct a house for you like that. The construction company will construct a house for you like that. Okay, you paid me 20 lakhs. The total estimated budget is 1 crore. Okay, you paid me 20 lakhs. Then I started the work and I completed construction. Remaining 80 lakhs, you are not paying it. So what I will do? Will I give the key to you? Will I give the possession to you? No. I will retain the property till you pay me that balance amount. Then it's vacant. Unnecessarily I am losing money also. So till you pay me that balance money, what I will do is I will let out also. I will go for letting it also. In this case, who is the owner? Construction company. Actually, if you look at the property documents, title, etc., is there in the client name. Okay. But who's holding the property? The construction company is holding the property. Okay. Construction company will be taken as a deemed owner. Simple. Whoever is holding a property for performance of a contract. Here construction work. Okay. So for not paying the money, I am holding the property. If I let out and get the income, for me also it will be taken as house property income. But if you look at as per the title deed, who is the real owner? Client is the real owner. But the rental income derived by the person who is holding the property will also be taken as what? House property income. Then continuous right for 12 years or more. If you look at rental agreements, they are signed for 11 months or 33 months. Once in 33 months they renew with a break of 1 month. Why, sir? Because if a tenant has paid rent continuously for 12 years, if you give a proof to the court will say, since he is a tenant in the property continuously without a break for 12 years, he is the owner of the house. For example, you are staying in a person's house continuously 12 years as a tenant. Without a break, you paid rent. Then, if you go to the court will say, you are the owner of the house. Okay, document may be with somebody else. A document of title deed may be with somebody else. But you paid rent for 12 years or more continuously. Then, you are the owner of the house. Okay. So, in such case, a tenant occupying and paying the rent continuously for 12 years, on the 13th year, he will be called as what? Deemed owner. Why deemed owner, sir? The document may be with the owner and in the name of another person. But as per law, you are a deemed owner. Simple. Who is the owner of the house? You check the title deed. In some cases, as per the title deed, there is a person's name. That person is not taken as a owner. Somebody else is taken as a owner. What are the cases we had seen? Number one, transfer to spouse. husband and wife transferring the properties themselves without adequate consideration. Okay, the person who's transferring the property will be taken as what? Deemed to be the owner, supposed to be the owner. However, if the property is transferred for adequate consideration and to live separately, this provision is not applicable. Okay, if a person purchases, parents purchase a property or anybody purchases a property, registers on minor child's name, okay, the property title deed will be in the name of the minor child, but income will be taxed in the hands of the person who purchased that particular property. Okay, of course, this is not applicable for minor married daughter. Holder of impartial estate, this we had seen. Okay, if you are holding a property which is not separated, the person who is holding, who is in charge of that property will be taken as what? Deemed owner. Okay, simple, sir. You have 3 brothers. Okay, there is a property dispute, but you are taking the charge to maintain and collect the rent, means you are taken as deemed owner. You cannot say the property is not there in my name. You collected the rent, you are the deemed owner. Member of a cooperative society. Though he may become owner after 20 years after paying all the installments, as per income tax law, if a member lets out the flat or property allotted to somebody else, that will be taken as house property income. Partial performance of the contract means, okay, simple. For some money or obligations due, if I hold a property, if I let out, for me that will be taken as house property income. But if you look at the title deed, the owner will be somebody else. Okay, I am holding the property, or it is applicable even for certain cases like loans. For example, you have borrowed money from a bank. Okay, you have not repaid. So what happens is, bank is taking the possession of the property. Okay, so till that property is sold out or the money is recovered from you, that will be let out. Now, bank is collecting the rent, but who is the real owner of the house? Somebody else. Okay, now in this case, bank will be taken as a deemed owner of the property. Partial performance of the contract. For some money due, for obligations due, if I take the possession of the property and let out, then I will be called as what? Deemed owner of the property. Continuous rights for 12 years or more. If there is a tenancy continuously for more than 12 years period, that tenant will become what? Deemed owner of the property. And this already explained. If a tenant is subletting the property to a subtenant, that will be taxable under what? Income from other source. See, when it comes to house property income, people try to cheat. How, sir? Number one, they take the rent in cash. From the tenant, they get the rent in cash. Okay. Sir, how to stop it? Simple. Income tax department says, we had seen in salary chapter, for claiming HRA exemption, what are the conditions to be fulfilled? You should stay in a rented house. Then least of the following: actual HRA received, rent paid minus 10% of salary, like that we had seen. Okay. Now, rent paid minus 10% of salary. To claim the exemption, you have to submit the proof. Number one. Number two, now as per the amendment, if you pay a rent of more than 1 lakh, there is an administrative provision not covered for your intermediate level. Okay. You are an employee, you are staying in a rented house. To claim HRA exemption, if you are paying a rent of more than 1 lakh, rent paid more than 1 lakh, then you have to submit the PAN of the house owner. You have to submit the PAN of the house owner. Let us assume you are claiming rent paid 3 lakhs. Then you have to submit the PAN of the house owner. Okay, you claimed exemption, that PAN is mapped. They will check whether that particular owner has disclosed the income or not, whether the person has disclosed the rental income or not. If not, they will send the notice. Like that, mapping is being done. Okay. So, normally to employees, if the houses are given for rent, to salaried person, if the house is given for rent, income tax department can easily catch out through the permanent account number, PAN mapping. with HRA exemption and whether the owner has declared that income or not. That is one method. Okay, sir. Let's assume you are the owner of the property, giving the property on rent to a business person, and asking him to pay rent in cash rupees 50,000 per month. You are the owner asking me to pay 50,000 per month in cash. Now, how income tax department will catch it? Now, income tax department is not going to tax the owner based on the actual rental value alone. Income tax department is not going to tax based on what? Actual rental value alone. They are going to compare other values. These are the values which are compared. Municipal value means that municipality or corporation will have a value for rent. Okay, per square feet, what is expected rent in this area? For every street, there is a municipal rental value. Every street, there is a municipal guideline value for registering the property as well as rental values available. Okay, so you will compare municipal value. Let's assume, okay, let me go for an Excel working. Let us assume you are collecting actual rent. You have collected 1 lakh per month in cash and telling to the income tax department that the rent is only 20,000 per month. Rent is only 20,000 per month. Then what the income tax department does? They compare municipal value. Let's assume as per municipal value, rent is 50,000 per month. Rent is 50,000 per month. Now what income tax department will say? Take whichever is lower as income. No. When it comes to exemption, it is whichever is lower. When it comes to income, it is whichever is lower. Sorry, exemption, it is whichever is lower. But when it comes to taxability, the income tax department will say take whichever is higher. 50,000 into 12 will be taken as what? Income. Do you understand? You received 1 lakh per month in cash, but to the income tax department, you are telling only 20,000 is the rent. Income tax department checks municipal value for the street, for the house, for the similar property. Okay, municipal value. This comes to 50,000 per month. They will take whichever is higher. Now, income tax department is not stopping with this. They will also check fair rental value. Fair rental value means similar property in similar location. Okay, let us assume let us assume this is a flat or a commercial building. You received in cash 1 lakh and declaring only 20,000 per month. In the same location, another person, a similar property has been let out for, let us assume, 1,20,000 per month. Okay, maybe your neighbor, adjacent house, or a similar flat in the same, community, or similar building in the area, like same size or square feet carpet area, that is let out for 1,20,000 per month. Now, what income tax department will do? Income tax department will say whichever is higher here also. So, whichever is higher. So, 20,000 only I am declaring. Okay, municipal value is 50,000. Fair rental value means rent of similar property in the similar location. Okay, now income will be 1,20,000 into 12. Now you cannot cry, sir, I collected only 20,000 per month. You cannot cry. They will say, see, there is a person who is living in the same area, a similar house or a property is let out for 1,20,000 per means. Your income should have been 1,20,000. Okay, that I will tax it. Now you are coming and telling, no, I am not received 20,000 per month. Extremely sorry. I collected 1 lakh. I collected 1 lakh per month, sir. Even now, income tax department will say, whichever is higher is taxable. So, house property income, actual income declared by you is not considered. Income tax department has its own method of taxing you. Okay. So what is compared? Actual rent is compared with municipal value and which one? Fair rental value. Whichever is higher is taken as taxable value. Whichever is taken as what? Taxable value, that is called as gross annual value. That is called as gross annual value. So in this example, gross annual value is 1,20,000 into 12. 1,20,000 into 12. From this, municipal tax paid by owner is allowed as deduction. Whatever is the municipal taxes paid by the owner is allowed as a deduction. This is called as net annual value. Nothing but income. Nothing but what? Income. So whatever is the municipal taxes paid by the owner can be claimed as a deduction. From this you can understand municipal taxes outstanding. Can it be claimed? Cannot be claimed. Cannot be claimed means you cannot deduct it. Municipal tax paid by tenant. Can it be claimed? Cannot be claimed. Municipal tax paid for current year by the owner. Okay, by owner can be claimed. What about arrears? Past municipal taxes paid can be claimed. What about advance paid? You need not note all these things, it is given, cannot be claimed. Okay, so municipal taxes paid by the owner either for the current year or for the arrears can be claimed. If it is outstanding or paid by the tenant or advance paid cannot be claimed. Sir, what do you mean by paid? Within what time? Within 31st March. Within the financial year it should have been paid. Within the financial year it should have been paid. It may be for current year or it may be for arrears. It can be claimed. Okay, it cannot be claimed for advance payments, outstanding or municipal taxes paid by the tenant cannot be claimed. This is known as net annual value. Okay, this is like gross salary, net salary, things like that. Okay, gross annual value minus municipal tax paid by the owner. It is called as what? Net annual value. From this, some deductions are given. From net annual value, 2 deductions are given. We will see that later. So that we will get taxable income. So that we will get what? Taxable income. Okay, let me give a small example. Actual rent 10,000 per month. Municipal values 12,000 per month. Fair rental value 15,000 per month. Now what will be the gross annual value? What will be the gross annual value? Whichever is higher. 15,000 into 12 will be the gross annual value less municipal taxes paid by owner. It can be for current year or arrears of municipal taxes paid by the owner. This can be deducted. This is called as what? Net annual value 1,50,000. From this, some deductions are given. We will see those deductions at a later point. So, as of now, we understand actual rent is compared with municipal value and fair rental value. We take whichever is higher. Sir, what is municipal value? Rent of the house in the similar location, rent of the house, okay, fixed by municipality, guideline value on rent fixed by municipality. Fair rental value, rent of a similar property in the similar location. Rent of the similar property in similar location, we call it as which one? Fair rental value. Now, sometimes there is an act called as Rent Control Act. Okay, as of now, this is applicable only in Delhi. Rent Control Act. Okay, Rent Control Act fixes rent called as standard rent. Okay, in Delhi, there is a standard rent fixed by what? Rent Control Act. So, whenever they give you standard rent, then you have to apply the steps. Step 1 will be, You have to compare fair rental value or municipal value, whichever is higher. That is the answer for step 1. Then step 2 will be, this is there in your notebook, you need not copy, or it is there in the material, you need not copy. You have to compare step 1 or standard rent. Take whichever is lower. That is the answer for step 2. Step 3, step 2 answer or actual rent. That is the answer for step 3. So, gross annual value will be nothing but answer in step 3. Simple. What is the first step? See, this step should be applied only when there is a Rent Control Act. Standard rent is given in the problem. Okay. So, fair rental value or municipal rental value, take whichever is higher. Then, that with standard rent, whichever is lower. That with actual rent, whichever is higher. Then answer in step 3 will be called as what? Gross annual value. From that you can deduct municipal taxes. From that you can deduct which one? Municipal taxes. So, all those things, whatever I explained, it is there. You need not copy, okay, whatever I explained so far. Municipal value determined by the local authority. Fair rental value, rent of a similar property in the similar location. Okay. Standard rent under Rent Control Act. Actual rent received or receivable, okay, by letting out of the property. Then, step for computation I already explained. Municipal value or fair rental value, whichever is higher. Step 2, answer in step 1 or standard rent, whichever is lower. That with actual rent or received or receivable, whichever is higher. Then step 3 is known as what? Gross annual value. Net annual value is nothing but gross annual value minus municipal tax paid. Okay. The 3 steps should be applied only when there are standard rent. There is a standard rent. When there is no standard rent, MRV, FRV, actual rent, whichever is higher. Then, for claiming deduction, municipal taxes should have been paid. Municipal taxes paid by the owner only is allowed as a deduction. Okay. Municipal taxes of the past year is all. Municipal taxes this also we had seen. Municipal taxes of the past years paid now will be allowed as a deduction. Then advance will not be allowed as a deduction. Advance is not allowed, outstanding is not allowed. Whatever is paid by the tenant cannot be claimed. So, apply the steps, then deduct the municipal taxes, then you will get what? NAV. You will get NAV. Okay. So, we will do a problem to understand better. Try to work out this. Try to work out for this particular thing. Apply the steps MRV or FRV, whichever is higher, that with standard rent, whichever is lower, compare that with actual rent, then take whichever is higher. Like that, apply for each house. Then municipal taxes 10% of municipal value. HP 1 and 2 due but not paid. 50% is paid. Okay, municipal tax of the last year and current year is paid. Advance is paid. They ask you to find out NAV of each house. Please try to apply and work out for this particular question number 1. Try. You shall pause and try. Okay, my screen presence is not required from now. Okay, I'll solve this particular problem by taking up a digital board. Okay, so my screen presence is not required for this problem and next problem. Okay, so we will work out this. Hope you tried it, then continuing with this. Hope you tried this on your own. Coming back to this particular solution, take municipal rental value or fair rental value, whichever is higher. That with standard rent, take whichever is lower. Then take that with actual rent, whichever is higher. So 18,000 will be taken as what? 18,000 will be taken as for house 1, gross annual value. Then the same way we have to work out for house 2 also. 24,000 or 24,000 whichever is higher, then that with 24,000 whichever is lower, same 24,000 will come. That with 36,000 whichever is higher. So for property number 2, 36,000. Property number 2, 36,000. Property number 3, be careful. 36,000 or 40,000 whichever is higher. Then 40,000 or 50,000 whichever is lower. 40,000. Then that amount with 48,000 whichever is higher, 48,000 will be the value of the property. House 3, 48,000. Once again, 36 or 40 whichever is higher, that 40 or 50 whichever is lower is 40,000. That with 48,000 whichever is higher. Next one. 42,000 or 42,000, of course, whichever is higher will be 42,000. Then that 42,000 or 30,000 whichever is lower. That 30,000 or 36,000 take whichever is higher. Take whichever is higher, 36,000. This one. 48,000 or 50,000 whichever is higher. That 50,000 or 50,000 whichever is lower will be 50,000. That with actual rent 54,000. That with actual rent 54,000 for house 5. House 6, you observe it very clearly. 45,000 or 50,000 whichever is higher will be 50,000. That 50,000 should be compared with 48,000. Take whichever is lower. Once again, 48,000 or 50,000 whichever is higher, 50,000. Okay. That with 48,000 whichever is lower, 48,000. This 48,000 or 42,000 whichever is higher will be 48,000. Whichever is higher will be 48,000. So 48,000 should be taken. Apply the steps. 45 or 50 whichever is higher, 50,000. Okay, that 50,000 with 48,000 take whichever is lower. Take whichever is lower is 48,000. That with 42,000 take whichever is higher. 48,000 is the gross annual value, 48,000. Then municipal tax paid only can be deducted. Municipal tax paid only can be deducted for house 1 and 2. For house 1 and 2, municipal tax is due but not paid. So it cannot be deducted. No deduction is available for house 1 and 2. Then for house 3 and 4, 50% of what is due is paid. Okay, what is municipal tax? This 24,000 into 10%, 2,400. This into 10%, 3,600. It's given. Municipal taxes are 10% of municipal value. So 24,000 into 10% is 2,400, then 3,600, like that it will come. Now house 3 and 4, let us see. Ignore the other values. Okay, let me erase everything. Municipal tax part alone, let us work out. This is 4,200, 4,800, 4,500. Okay, this is 10% of municipal value. Now, property 3 and 4, 50% is paid, which means how much is paid? 1,800 is paid. Only this much can be claimed. Here, 50% is paid, 2100 is paid, only that much can be claimed. So less municipal tax paid for house 1 and 2. For house 1 and 2, nothing can be claimed. For house 1 and 2, nothing can be claimed. For house property number 3, how much can be claimed? 50% is paid. So what is paid? 1800 is paid. This 1800 can be claimed. Okay, 46,200. For house number 4, also what is paid? 2100 can be claimed. Okay, next look at house number 5. House number 5, check this. Municipal tax of last year and current year is paid. So whatever is paid for last year and current year, 4,800 for last year, 4,800 for current year, we can claim full 9,600. We can claim 9,600. Arrears paid can be claimed. Arrears paid can be claimed. House number 6. Advance paid, can it be claimed? Advance paid, can it be claimed? No, it cannot be claimed. Only current year paid can be claimed. So 4,500. Yeah, this 45,000 into 10%, 4,500. 4,500. Whatever is paid can be claimed. So we applied the steps. Okay, FRV or MRV, whichever is higher, that with standard rent, whichever is lower, that with actual rent, whichever is higher, we got gross annual value. From the gross annual value, municipal tax paid is deducted. Once again, for house number 3 and house number 4, 50% is paid. Okay, 3,600 is for 1 year, but we paid 50%, 1,800. 4,200 is for 1 year, we paid 50%, so 2,100. Then house number 5, last year and current year is paid, that can be claimed. House number 6, current year paid only can be claimed because advance paid cannot be claimed. Advance paid cannot be claimed. Try to work out question number 2. This is a simpler one. You shall pause and try to solve it. Jayashree owns 5 houses in India. All are let out. Compute GAV of the house from the following information given to you. Pause the lecture. Try to work out. Try to solve it on your own. Shall we proceed? First house, no standard rent is given. So no need to apply any steps. No need to apply any particular step. Okay, 80,000, 90,000, 72,000, whichever is higher. 90,000 is the answer. Second house, standard rent is given. So apply the steps. 55,000 or 60,000, whichever is higher. 60,000. That with 75,000, whichever is lower. 60,000. That with 72,000, whichever is higher. 72,000. Once again, I repeat. MRV or FRV, whichever is higher. 60,000. That with 75,000, whichever is lower. The standard rent or step 1, whichever is lower. That with 72,000, whichever is higher. This is GAV. Next one. 65 or 65, whichever is higher will be 65. That with 58,000, whichever is lower, 58,000. That with 60,000, whichever is higher will be 60,000. This one, no need to apply any steps, whichever is higher. Because wherever standard rent is given, we have to apply the steps. If standard rent is not available, you can directly work out whichever is higher. Okay, step 5, that is house 5. 80,000 or 75,000, whichever is higher is 80,000. That with 78,000. Okay, this 80,000 should be compared with 78,000, whichever is lower. 78,000. That with 72,000, whichever is 78,000 or 72,000, whichever is higher. 78,000. Once again, last one, 80,000 or 75,000, whichever is higher is 80,000. Then that with 78,000, whichever is lower is 78,000. That with 72,000, whichever is higher is 78,000. So this is the gross annual value. No municipal tax paid is given to us. So gross annual value we worked out. Apply the steps, okay? MRV, FRV, whichever is higher. That with standard rent, whichever is lower. That with actual rent received or receivable, whichever is higher, will give us gross annual value. Done. Next. We shall try this. Question number 3. Please pause and try this. Question number 3. First solve it on your own, then continue with the solution. Sharada owns the following houses. Hope you tried it and continuing with this. Okay. First house, simple. Whichever is higher, we will take. Whichever is higher, we will take directly 1,50,000. When standard rent is not given, directly take whichever is higher. Next. 72 or 75, whichever is higher is 75. That with 80,000, you have to compare, take whichever is lower. Okay. Then that with 84,000, whichever is higher. Once again, 72,000 or 75,000, whichever is higher. 75,000. That 75,000 should be compared with 80,000, whichever is lower. Compare these two values, whichever is lower. That with 84,000, whichever is higher. This is the gross annual value. Next house. Whichever is higher, 75,000. That should be compared with 72,000, whichever is lower, 72,000. That should be compared with 63,000, take whichever is higher, 72,000. Then municipal tax, whatever is paid for current year or arrears can be claimed. Municipal tax paid for current year or arrears can be claimed. Outstanding cannot be claimed, advance cannot be claimed. So GAV for the first house 1,50,000, second house 84,000, third house 72,000 minus municipal tax paid. Okay. House 2, how this 12,600, sir? Okay. House 1, nothing can be claimed. House 4, 14,000 into 50% plus 14,000 into 40%. Or directly you can say 14,000 into 90%. Current year and last year paid. Current year and last year paid can be claimed. House number 3, 4,000 paid for the current year. So whatever is paid for the current year can be claimed. House 1, nothing can be claimed. House 1, nothing can be claimed because nothing is paid. Outstanding, it cannot be claimed. I repeat, first house, whichever is higher, 1,50,000. Second house, okay, 72,000 or 75,000, whichever is higher, then that with 80,000. Oh, I made a mistake. Yeah. While explaining, I made a mistake here. 72 or 75, whichever is higher, that with 80,000, whichever is lower. Sorry, yeah, 75,000. That with 84,000, whichever is higher. Anyhow, final answer is correct. Third house, 60 or 75, whichever is higher. That with 72,000, whichever is lower. That with 63,000, whichever is higher, is 72,000. So, municipal taxes paid can be claimed. First house not paid, second house last year plus current year 90% totally paid, claimed. House 3 current year only paid, that can be claimed. Okay. We will go to the first special case now. Let's assume as standard rent was applicable, we applied the steps and calculated. Okay, GAV, we got step 3 as answer. Okay, let's assume there is a vacancy. Vacancy means unoccupied house. Tenant has vacated the house and the house is not occupied. It is not occupied by you, it is kept vacant. Then what to do, sir? Simple. Everything you take it for a whole year. Everything you take it for a whole year. All these things should be taken for whole year, even actual rent for full period. Full period means the whole year. MRV whole year, FRV whole year, standard rent whole year, everything should be taken for the full year. Then, suppose if there is a vacancy, answer in step 3 will be called as expected rental value. Will be called as what? Expected rental value. From that, deduction for vacancy is given. That is actual rent received or receivable into number of months vacant. Okay, this you deduct it. This will be called as gross annual value. Simple. Take everything for the whole year, get the expected rental value. Step 3 answer will be called as what? Expected rental value. From that, deduction for vacancy is given. Then actual rent into number of months vacant. Then as usual, municipal tax paid. It will give us NAV. This is explained in theoretical steps also. This is explained in theory also. Yeah, let me come to that. If the property remains vacant, what to do? It's explained in theory. Everything you work out for 1 year, ignoring the vacancy, then gross annual value is equal to expected rental value minus vacancy allowance. What is vacancy allowance? Actual rent into number of months vacant. Okay, the answer in step number 3 will be taken as what? Expected rental value. Everything should be worked out for the whole year. One more step we will continue. Okay, step 3 answer minus vacancy allowance. What is vacancy allowance? Rent per month into number of months vacant. Let us work out a problem to understand in a better way. Sri Selvivani is the owner of the house which she let out. Determine NAV. Determine NAV. Okay. Municipal rental value or fair rental value, whichever is higher. That should be compared with standard rent. That should be compared with standard rent. Take whichever is lower. 1,20,000. That should be compared with actual rent. 12,000 into 12 will be 1,44,000. take whichever is higher. Take whichever is higher. This is known as expected rental value. Step 3 answer. Okay. 90,000 or 1,40,000, whichever is higher. That 1,40,000 should be compared with this 1,20,000. Take whichever is lower. That should be compared with actual rent for the whole year. Whichever is higher will be called as what? Expected rental value. And there was a vacancy for 1 month. There was a vacancy for 1 month. Then you can claim the vacancy. This is it. Municipal value or fair rental value, whichever is higher, 1,40,000. That is compared with standard rent, whichever is lower, 1,20,000. That is compared with actual rent for the whole period, whichever is higher. We call it as what? Expected rental value. Vacancy allowance, 1 month vacant. Deduct it, you will get gross annual value. You get which one? Gross annual value. From that, less municipal taxes paid. Less municipal taxes paid will give us what? Net annual value. Let me to come into the screen. So hope you understood this concept. How to find out gross annual value, municipal value or fair rental value, whichever is higher. Compare that with standard rent, take whichever is lower. That should be compared with actual rent for the whole period, take whichever is higher. Then what do we do? Deduct vacancy, number of months vacant into number of months vacant into what? Actual rent. We allow the deduction for vacancy, then municipal tax paid. Municipal tax paid. So with this, the basics of house property income is over. Okay. In the next class, we will proceed with, suppose if there is any unrealized rent, what to do? Unrealized rent, what to do? Okay, suppose if the owner is having a self-occupied property, what are the benefits we are going to see? Okay, what are the deductions he can claim we are going to see? Then from gross annual value, 2 deductions are allowed. From gross annual value, 2 deductions are allowed. What are those deductions we are going to see? Okay. Gross annual value minus municipal tax, we get which one? Net annual value. From the net annual value, 2 deductions are allowed. Standard deduction and interest on borrowed capital under section 24. What is it? We are going to see. Okay, other additional points we will discuss in the next class. So it's not like a salary chapter. House property chapter probably will take another 2 or 3 sessions only to complete. Okay, one of the easy chapter also. This is tested for minimum 5 marks, maximum up to 8 marks in the exam. Okay, so meet you in the next session. Please revise all those things, whatever we have done today. Okay, before you come or before you open the next class. That is concept of what is the meaning of property, what is the meaning of owner and tenant relationship, and the concept of deemed ownership, that is most important theory question. Then steps in computation of house property income, that is gross annual value, expected rental value, vacancy allowance, how to do, then municipal tax, when to deduct, all those things please go through once again. Okay, no homework, be happy, no homework at the end of the class. Okay, next class we will continue with house property income with additional cases. Have a great day.